The European Union Foreign Policy Chief says Russia's blockade of Ukraine's ports is a war crime. The summer harvest season is underway in Ukraine, but its exports of wheat, sunflower oil and corn have been halted at its ports, driving up food prices and leading to shortages.
One cannot imagine that millions of tons of wheat remain blocked in Ukraine, while in the rest of the world people are suffering hunger. This is a real war crime.
Speaking to the African Union, Ukraine's President Volodymyr Zelensky said Africa was a hostage of Russia's war on his country.
On the 24th of February 2022, Russian troops invaded Ukraine in an attempt to reclaim the country as their own. While the impact was felt heavily around the world as lives were lost and mass destruction caused, the conflict has also caused significant impact to world food security. Each year, world wheat production is approximately 726 million metric tons. The aggregate production of Russia and Ukraine accounts for roughly one-third of this. Annual demand for wheat imports is largely inelastic, as it is a core component of both human and animal feeds. Africa, as a whole, has consistent challenges in feeding their people. As consumers, they use wheat broadly to make bread, biscuits, pasta and noodles, whereas as producers, African crops tend to suffer poor yields due to the harsh growing environment. During the 2020 to 2021 season, African wheat imports totaled just short of 55 million tonnes, while they were only able to grow a total of 25 million tonnes domestically. Australia is a net exporter of wheat, producing approximately 32 million tonnes per year, with a domestic consumption rate varying between 8 and 9 million tonnes. There were two key influences on global wheat markets as a result of Black Sea conflict. The initial consideration was the change to the global balance sheet, as in the assumption of losses to Ukrainian wheat production due to crops being destroyed. And secondly, the change in price point based on a risk premium being factored into any trades being booked with Russian counterparties. The risk premium goes some way to cover opportunity costs of potential supply disruption of grain leaving the Black Sea region. All else being equal, both of these factors should increase the global value of wheat. As we look at the curve, the outcome of this scenario becomes quite predictable. If we assume limited change in demand due to existing stocks, the reduction in supply shifts the curve to the left and simultaneously puts upward pressure on the price level. When considering the time of the invasion and analysing wheat values, we can clearly see the prospect of restricted supply sharply increase the price point of wheat markets. This is an excellent example of economic principles in operation triggered by real changes in market dynamics. As time passes, we can see Chicago futures peak in early May. However, the other key observation is the width of trading range. Each session, when compared to the time prior to war, the uncertainty of supply has added a high degree of volatility to the market. While the increase in price point is considerable across the months following the invasion, a price ceiling does exist due to substitution of alternative protein sources such as pulses. The other key economic influence of the Ukrainian war is that of currency. The US dollar is widely regarded as safe and stable, and thus in times of uncertainty, funds tend to take a risk-off approach and revert to the US dollar. The result of this strengthens the US dollar against other currencies, but also dictates the level of competitiveness of exporting nations. For example, Australian wheat is priced at $300 free on board ex-Kwinana terminal with a $50 freight rate to Egypt. Traders would account for $350 plus a margin when making this offer. However, all offers are made in US dollars, so volatility in foreign exchange markets means the final trade price converted back to Aussie dollars could vary greatly from the initial calculation. To account for this, the export trader would increase their margin so they were covered for currency risk. The net impact of all these factors combined is rising feed mouths in developing countries with ever-increasing populations. By carrying out targeted attacks on Ukrainian ports, Russian military are not only heavily impacting the ability of Ukrainian farmers to get their produce to market, but in turn reducing GDP, while also elevating the costs of foodstuffs in a global landscape where inflation has increased exponentially over the past 12 months.